All right. What is up, tycoons? What's up, traders? Super excited for today's video. Hopefully, you guys had an amazing trading week as we did. All right. We absolutely crushed it. There's lots of amazing data we're going to go over in today's video. All right. It's going to be, straight gas, no filter. Okay. Just straight important data. If we take a look here over the last 12 months, all right, we've had 34 straight trading days of overbought readings. Now, does this mean that the market is due for a pullback? And are things about to crash? That's what I'm going to explain in today's video, as everyone, this has been the most hated bull market and bullish rally pretty much ever. Okay. Everyone is against this right now. And, people really aren't as happy as you would think, because there's so many bears out there that are still stuck in 2022 and living in the market of 2022 and not adjusting to the new market that we're in right now. If we take a look, the call options volume tied to the S&P 500 index, absolutely skyrocketing, guys. Okay. It's over 2020, over pandemic levels by leaps and bounds. Okay. Now, I'm not going to lie, I'm part of this group. Okay. If you look at the chip stocks average daily call options volume, again, it just absolutely surging, guys. It's absolutely insane. Is this a warning sign, right? We're seeing markets extremely overbought. We're seeing tons and tons of call options volume. I'm getting emails, guys, saying new Pelosi buy alert. She bought $1.5 million worth of Apple and Microsoft. Okay, this is a real email I'm getting. Are all of these warning signs, or is there still room to the upside? That's what we're going to go over in today's video. All right, we're also going to break down TLT. I've been absolutely crushing TLT. It's one of my favorite things to trade. It's pretty much my bread and butter and one of the main things that I focus on. So we'll, give you guys my thoughts and opinions on TLT. Be sure to smash that like button and subscribe to the channel if you guys are new. All right. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. And today's video is sponsored by Simply Wall Street. There's a link in the description or pinned comment down below. You guys can get a 14-day free trial and up to 40% off of your membership. It's a really great platform. And you can also email me for a one-on-one coaching session or a one-on-one Zoom session at zackleytrades@gmail.com if you're ever interested. Now, this is some juicy data, guys. All right. And this is it right here. This is the stuff that you want to be paying attention to. All right. If you take a look at the NASDAQ 100, we're going to get into the S&P in a second. But when you have what we have right now, which is you have the 200-day percentage deviation. And when it's above 20%, which that's where we're at right now, we're at above that 20% region. The 6-month to 12-month returns, guys, are absolutely nuts. All right. Now, if you can't see this, okay, on average, it's about 11.2% return. All right. Under the current conditions that we're at right now. And then we're at that's for 6 months, and 24.9% returns within the following 12 months. And that's from when, this signal happens. So, it's very possible that in the next year from now, by next summer, the NASDAQ could be up another 20 to 25%. Now, does that mean there's not going to be corrections along the way? Does that mean that, things can't, pull back or chop and move a little bit sideways? No, right? But if this data is going to continue to be a leading indicator, right? Because price has been telling the story, okay? The price in the stock market and the prices you're seeing going up and down on stocks is a much different than what you see on TV and what you hear about the economy, right? It's all doom and gloom, recession, different things like that. When you look and listen to the news and, try to find things out about the economy, but the stock market and price have really been, price has been what you've been wanting to follow, right? Price has been right, not really so much of the economic data when it comes to trading and, trying to make money in the stock market. Now, this is the S&P 500, and we're at the same thing. If you look at the 200-day percentage deviation, when it's over 200%, all right, the S&P 500 is usually up about 4.7% 6 months out and 11.1% 12 months out, guys. These are crazy, crazy, numbers and data to really be looking at. Okay. And so this is stuff that you want to be paying attention to when everyone else is preaching doom and gloom. These are some hard numbers to really fight against right now. History doesn't have to repeat itself. Past performance doesn't, mean that, these things are going to happen in the future, but this is good information to have, right? Now, here's another sign that this bull market isn't over. If you look at the S&P 500 returns when negative the year before, and it's above 10% year to date at the end of June the following year, all right, we see some crazy, crazy numbers, guys, anywhere from 23% 6 months out and all the way up to 40% 6 months out. Now, of course, that's on the higher end, okay? But you know, if you take a look at the average, 6 months out, it's about 11.8%, and 12 months out, it's about 14.4%. So I mean, really, really, really interesting data there. This is, you know, definitely stuff that you guys want to consider, you know, moving forward before you try to get overly bearish and say that everything, you know, the year is basically going to end down 30-40%, right? um Specifically, this has been a really good chart that's been helping me out. This is the July market performance, all right? And so what you want to pay attention to here in particular is the dotted lines, okay? These are all of the pre-election years, and then these, the solid lines, these are all of your standard years, okay? And this is the past 21 years and the pre-election years since 1950 to 2019. All right, and those pre-election years in July, which is this month coming up, look at the first 10 trading days, guys. The first 10 trading days are very, very juicy, okay? Now, again, this doesn't have to repeat itself. This pattern doesn't have to repeat itself. But if it does, these are going to be some potential good returns in the beginning of July. All right. And then what do you see? You start to see a sell-off and a cool-off across, you know, the Dow Jones, the NASDAQ, the Russell, the S&P, you know, later in July, in that second half of July, right? Now, the reason I'm bringing this up to you is because, you know, I showed this chart here in one of my last videos for June, and you had this period here where the market pulls back towards the end of June. And then the last 4 trading days, we see phenomenal gains in the end of June. And that's what this week has been all about, right? In the Discord, you know, we actually posted this analysis here, right? We have a very clean Elliott wave. Okay. We had a 1, 2, 3, 4, 5 is what we're looking for. And we're trying to hit our wave 5 targets right now. Okay, we had a very textbook falling wedge as wave 4, ABCDE triangle correction. That's what this is right here. And we ended up getting that breakout. And today we made new highs, right? 44.50 was our old highs. We cracked through there, we hit the target for today. Really, really amazing. And this is when, you know, I got in call options on the S&P right here. Now, why do I like it right there? Well, there's a few reasons, but one of the reasons that I want to highlight to people is this yellow line here. This is going to be the month to date anchored VWAP. And market makers, okay, and people like Ken Griffin over at Citadel, they tend to fill orders at the VWAPs, right, at the volume weighted average price. And in particular, this was the month to date anchored VWAP, and you can see we had a strong bounce here, okay, strong bounce here. And then when we came back down again, look at what we did. We bounced extremely hard. We went from 43.20, all right, or about 43.30 on the SPX, all the way up to about 44.50. It's a 120 point move. Really, really amazing gains if you're trading SPX or SPY call options, right? And this is it zoomed in, right? You see we had the ABCDE falling wedge correction, all right? And originally, this is another post we made on the Discord looking for the continuation up higher, and sure enough, that's what we got, right? We came back, we had the breakout, we pulled back to our major retracement levels, and we ended up pushing up higher, right? If we look over here, that's what we can see, the breakout, the retracement, push up higher, pull back again, and then we completed our targets here. So I do think that the S&P still has room to go, and I definitely think we're going to crack 4,500 sometime here soon. I don't know exactly when, but it wouldn't surprise me if it's in the first half of July. Okay. So if we take a look, the reason I'm saying the first half of July is, again, this data set right here. The first 10 trading days of July have been historically bullish in these pre-election years. All right. If you take a look at the overall time, okay, the Nasdaq's best 8 months are into mid-July, and then after mid-July, again, that's when things start to cool off here. Okay, that's what I want to highlight to you. You know, a lot of people is, you know, we tend to top out here, and this is when we start to move sideways. Okay, we get this sideways consolidation up until about October, November, and then we see another really big push up in the market, okay? And this is going to be the pre-election years, right? The blue line, that's what we're looking at, okay? And this is the purple line is 2023 right now. I mean, just really crushing the market, really, really doing amazing things in the market right now. And so, you know, do I think that we could pull back? Yeah, Definitely. And then we start to see a little bit of chop and some sidewaysness. We're definitely due for a correction. And if we start to move sideways, this is going to take a lot of those overbought conditions out of the market and potentially give us room, to have a really, really strong close end of the year. All right. Now, the old saying is that dumb money trades at the open while smart money trades at the close. And if you take a look, since the S&P's last time all-time high on January 3rd of 2022, the prior close through the first hour of trading has accounted for essentially all of the market's decline. So I thought that this was some really, really interesting data is, basically saying like, hey, if you buy at the close, and then the first hour of trading for the next day, that's accounted for all of the market's decline. And this chart really shows it to you right here. If you take a look at the final hour, that's going to be here in red. Okay. If you take a look at the first half hour, that's here in blue. And you can see that that's the one that's really declining there. And then if you have buy and hold right here, all right, this is the one that's it's still above buying in the first half hour, and then middle of day is going to be gray there, okay? And you can see that that's actually performed the best right here throughout this time. Right. And this is since January 3rd of 2022. Right. And so I just thought that this was really interesting. This is the cumulative return of $100. Right. Now let's get into TLT. Okay. TLT, as I mentioned, is one of my favorites, been absolutely crushing this one. And, it's to me, it seems like it's following the structure. Okay. We had this initial, triangle wedge pattern, whatever you want to call it. And, we got a breakdown of here. And there's these gaps down that we have to fill on TLT here and here. Now, of course, there's gaps up to fill, right? We haven't filled all of this gap. We haven't filled this gap. And we haven't filled this gap. And I do think TLT is going to fill these gaps and go back up to 112. But the question is, how soon is it going to do that, right? One thing that people have to realize is if Powell and the Fed is actually going to be raising rates again. And this really was just a skip and a pause, and then they're going to raise rates again. If interest rates are going higher, that's going to result in bond prices going lower, right? Now, the big question is how much of this has the market priced in? And, speaking about the bond market, maybe the bond market's already priced some of this stuff in, and maybe you won't see, a huge spike in yields and interest rates. But if you do, and that's going to result in TLT dropping, right? And so we're looking to see if we're going to get this 5-wave structure to the downside, bringing TLT right around the $96 to $97 price range. As again, we do have that gap down to fill, and this is right here at $95. So, if we end up getting 2 more rate hikes, it's very possible that we could get this $95 gap fill on TLT, which would be really exciting for me. Okay. I think that, that'll be a really nice opportunity, for me, for someone like me and the way that I like to trade. But, that might not be right for everybody. Just if it drops below 100, it gets that 95 level, but it's definitely something worth evaluating. Now, we got that very strong move 3 to the downside, and we've got a nice bounce up here. Okay. And we're going to see if TLT stays below 103 in this 102.88 area, essentially. And if we start to get this wave 5 down, that's where our targets is going to be around $95 to about $97 on TLT for that structure to complete. If we look at our MACD right here, okay, it's starting to curl over. And if it crosses below that yellow line, that's going to be a potential sell signal and could indicate further bearishness and a sell-off in TLT. So that's definitely something you want to be mindful of, right? You could say a little bit right here that we have a little bit of a rising wedge right now. Okay. You can see the structure right here. And so we're going to see, does this turn into a rising wedge where we see a sharp drop to the downside for our wave 5 targets? Maybe, right? I'm not long or short TLT right now at the moment. And I don't really do very long dated swing trades. Typically, trade TLT intraday. I do a day trade or I swing trade at 1, 2, maybe 3 days at the absolute most. And that's what's worked for me, right? I actually started a 1K account as a little bit of a challenge last month, right? At the very end of May, I started that one. And it's actually up above this right now. It's at about 3,500, but I was running around all day, so I didn't really take any screenshots. This was the last screenshot, but that 1K account is up over, it's at 3,500 now. So, And that's in a very short amount of time that basically it went up 250% in about a month. So I'm going to see how quick I can get this account to 10K. And then it's going to be really, really nice doing some things with TLT with 10K in this account. Right. And these are some of the posts in the Discord. I'm trading and I try to put, my TLT trades in the Discord for some of the other members so that they can see, what my thoughts are and everything. But this was a 73% return, okay, on TLT. And, this was like a 1 or 2 day swing trade, right? Purchased it on the 20th. It expired on the 23rd. And then I ended up selling them the next day. So, just quick trades. And these are the type of things I'm doing. And then as this account grows larger, right, just scaling into more contracts, right? Originally, I had about 5 contracts per trade. Then we got 17. Today on the TLT trade I had on this account, I had about 35 contracts. And then we're going to move that up to 50. And then, from there, I'll just be buying separate strike prices, trying to get about 50 contracts per strike price for TLT. Okay. Now back to the stock market. All right. This is the S&P 500's average return following down days this year. And this is pretty crazy, guys. Pretty crazy. If you take a look, this has been a buy the dip year. Okay. This is what we're looking at right here. And, again, this is the average return following down days. And we're seeing about a 0.3% return following down days. So, what that suggests is that when there are dips, people are coming in and buying those dips, and the market is recovering and going back up higher the next day. Right. Now, another thing that, I've posted before in some of these videos is XLI. The industrial sector has been on fire, guys, absolutely crushing it. And we actually just hit the second target zone right now. Okay. And again, look at this month today anchored VWAP in yellow. Look at where we broke out. We pulled back and we bounced at the 23.6 Fibonacci level, which was also the monthly anchored VWAP. And we saw buyers step in and push us to that overhead supply zone that we really haven't touched since November of 2021. And then back here in January of 2022, it's been over a year since we've really come back to these price levels and tested these levels on XLI, and industrials have been absolutely on fire. Now, this is another really good chart right here, just showing you guys the real strength in industrials, okay, over a much larger time horizon, making all-time highs. And what this is this is the division spread of the equal weight industrials ETF. Okay. So, RSP is the equal weight ETF. So this is the equal weight industrials ETF divided by the equal weight S&P 500 ETF. Okay. So equal weight industrials divided by equal weight S&P. And what we can see is this thing is making all-time highs, right? And absolutely just crushing it. So, a lot of people like to look at the equal weights, okay, to look at and get a better sense of, how the market is actually performing, how is it actually behaving when you weight it equally versus just looking at the largest market cap weighting. And, this is an extremely bullish chart and most likely will continue this bullishness. Again, most likely we're going to see some type of a pullback towards the later end of July through the summer. We might get that chop, we might get that sideways movement, and then be looking for a stronger rally towards October, November for things to really start to heat back up again in the market. Now, hopefully you enjoyed this video. Smash that like button, subscribe if you did. All right. You can always email me once again for a one-on-one Zoom session, exactlytrades@gmail.com. All right. And don't forget about today's sponsor, Simply Wall Street. It's a really great platform if you guys don't know how to do fundamental analysis and you're not a pro. Right. I've been using it for a very long time, and they have their pros and their analysts doing a really great job at doing some fundamental analysis and providing you guys with some excellent charts that are easy to read, simple to look at, and also, putting things very simply for you guys so you can understand the fundamentals and whether potentially something is overvalued or undervalued. I want you guys to use that 14-day free trial to actually look up some of your favorite stocks or a stock that you want to invest in that you haven't already. And it's going to really help inform you some more. And that's what you need, right? Is you need good information whenever you're trying to make investment decisions. And Simply Wall Street is definitely a great and affordable platform to help give you some solid information when making your investment decisions.